Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So, as we could see on the technical side, there's no big surprises in the gold performance in last week. On Friday, you could see it even has become the inside session that brought nothing new to our analysis that we have prepared on the Thursday. And, well, based on the current Fed policy and ongoing events that we have, we still think that gold should remain under pressure in the nearest few months, because now we're coming to the Fed rate change for 75 basis points or even for the whole percent, which is, by our opinion, is more probable, and we think that whole percent is not totally priced in yet in the performance. Then we will get the break until the September. In all this period, well, it will be some vacuum on information from the Fed. It's investors could only gamble on what will happen the next Fed step. It means that overall environment and the sentiment on the market should remain the same. And only closer to the autumn and to the November elections, it could start to change in favor of the gold. Yesterday, we have dedicated lots of time to explain why we think that Fed capitulates at the face of the inflation and switch the back pedal. They have no other choice to do this. And here we see a bit different view compared to the big banks. As we have shown recently, although big banks such as the Bank of America suggest the same, that Fed will fail to lead rate even to the 4%. But after that, their expectation stands in expectation of easing of the inflationary pressure. Because it will be some kind of the recession starting, and during recession as usual inflation should dropping. But here we disagree. We agree that Fed will capitulate and switch the big pedal, but we disagree that it should stop the inflation. And the result of this capitulation will be higher inflation than it was standing before, just because this is not a simple recession as we explained already. This combination, as you understand, the stopping of the interest rate hiking cycle, rising inflation, and the recession in the economy, it should be really great background for attracting investors' attention back to the gold. So some investors already start to suggest something, suspect something, as we have shown you in today's weekly report. Additionally, the political background is also changing. So in today's report on the gold market, we have taken a look at some important political issues that we suspect might be very decisive for gold market as well. In particular, speaking closer to the end of the summer and starting autumn, we should be ready for really loud firings of the big politician figures. And Joe Biden probably will not be the exclusion from this list. So Republicans are not intend to wait until 2024. They start active aggressively after they win the elections in November. And actually they're already starting, because you could just check the headlines that you have from the Republican media. They already start discredit Democrats' policy as inside the country as in the foreign arena, to show the mistakes for public and getting more and more public opinion on the side of the Republicans. So together, this turning in United States policy that should happen very soon and fast, hardly it will be peaceful. That brings more uncertainty. So right now, the United States is treating in the safe haven as politically, as economically. But once this event starts happening, this role as a safe haven country might be, well, get some flaws. So these two big component of our opinion that gold market, well, could start reversing up earlier than we suggested initially, because events are going really fast and they are more drastic than we thought. So that's you could read in a report. On the technical side, in nearest time, we suggest that the chance on the pullback exists because market stands at the weekly XOP and weekly oversold. Theoretical, this combination suggests at least minor tactical pullback. Since we do not have a lot of events on the coming week, European Central Bank meeting barely makes impact on the gold market usually, so it will be some relief time for the gold traders, and they easily could try to make some bounce response to the weekly target right there and showing some pullback. Most probable that the sale of the possible upward action will be around 18 even. It's just because here you can see previous lows, confidence resistance, and daily overbought. So hardly market will pass this area, at least on the coming week. This is the important area to consider for a possible taking a new short position if market get there. Additionally, we could keep an eye on tactic short-term bread and butter trade, because take a look, this recent drop looks like good thrust, and if market will show the 30% pullback here somewhere to the 1750 area, that might be the bread and butter stop that led us to make the tactical short-term bearish trade as well. On a lower time frame, we do not see yet particularly how this reversal will be prepared. The only thing that we have currently is some kind of the divergence is growing. What pattern might be formed here is difficult to say. Maybe it will be kind of the, I don't know, this the hand and shoulders, something of that sort. This will be left shoulder, head, so maybe right shoulder. We will see, because currently we don't have pattern in place. But at the same time, I would say that this pattern were interesting only as the tool to calculate possible destination point of the pullback. So for example, if we'll get the hand shoulders, it doesn't mean that we intend to trade it on the long side. We just need this ABCD target to understand where, for example, bread and butter trade could start on the daily chart. The scalp traders who intend to make the long trades on the gold market, yes, indeed, it is vital information, vital pattern for a trading plan, because without the pattern currently it's really dangerous to take any long position. So that's the few moments that we will keep an eye on the next week and see what the particular patterns we will get for trading.